All right, you guys, I hope you're doing well. Last video for the week, Friday. And well, a lot happened this week, actually. We had the Fed meeting, a decision was made with another 25 base points. And directly after, we see a lot of problem with regional banks. Meanwhile, there are two more regional banks in serious trouble. Bear in mind, 4 are already more or less insolvent or have been taking over. Plus, we had in Europe the problem with Credit Suisse and UBS. So this aggressive interest policy in the US, and they reached now 5%, by the way, is obviously causing a lot of problems. And also we saw yesterday that the ECB also increased by 25 base points. So we will see what's going to happen in Europe. But funny enough, this is all obviously not so bad for the Bitcoin. Stay tuned. We will have a look to the Bitcoin. But first of all, we look into the overall market. And here we start, like always, with the S&P 500, the most important index in the world. And as a result of this week, it's more or less all red. This is interesting because also this week was the most important week when it came to quarterly reports. More than 80% of the companies, the US companies, reported the quarterly numbers from the first quarter. And all in all, the results were much better than expected. This is really, on the one hand, very good. But as you can see, the heat map doesn't reflect it. And this has a lot to do with the problems with the banks. For this reason, we quickly check the further expectations regarding the interest. And here we have a FedWatch 2. Next meeting will take place in June 14, so it's another 6 weeks to go. But it's interesting to see the market believes with more than 90% that we will not see any further increase in interests. Most likely absolutely necessary. And the market believes that in the second half of the year, we will see probably 200 base points, which is 2% down. So all in all, that would mean we come down in the second half from 5% actually to 3%. This is actually what the market believes in the moment. Interesting at this point of time is to have a look to the gold price. And because, well, gold is safe haven, we believe Bitcoin is also safe haven. And interesting is, we have here a bigger picture since 2018. What happened to the gold price after the Fed meeting. And it's interesting, we are clearly over $2,000, as you can see, 2038. We were up to 2075. And interesting is, when you look at these peaks here, we are not far away from reaching the all-time high in gold. And this reflects that people are really scared about the money system in the United States, at least in the moment. We will see what's going to happen in Europe. And they do all these withdrawals from the banks. This is basically they take the deposits out of the banks and they move it into treasuries or they move it into gold. And obviously, as we will see now, they move it also into Bitcoin. And here we come to the Bitcoin live. 29,172, more or less the same like yesterday. So we stay stable over $29,000. That's really good. We quickly check the market capitalization. Since quite a while, we are on place 11. Gold is on 1, silver is on 5, and Bitcoin the 563 billion on 11, just after Meta and before Tesla. So that looks very stable. Now is the time to check the Bitcoin halving clock. As you guys know, countdown is running. Every day we look at it. It's still 338 days to go. No change in the estimated time. April 7, the halving should take place. The most important event, by the way, for the Bitcoin every 4 years. Okie doke. So by the end of the week, Bitcoin over $29,000. This week and the last week was very important for the overall market. As I said, 80% of the quarterly reports are out, so more or less this season is over, you can say, and there will not much come. Interesting will be to see how inflation goes on, and all the price indexes and manufacturing indexes. This is something we have to watch in the next 4 to 6 weeks. But what we can say is Bitcoin and gold is taking profit out of the actual banking crisis. So about time to check the technical background of Bitcoin. We start with Fear and Greed Index. We are stable in a region of 61%, so in the greed zone. BTC is green on the heat map. The rest is more red. Dominance still over 48%. Bear in mind, the total market is 1.2 trillion. Half of it, and the total market, by the way, is 23,000 coins. Half of this market is the Bitcoin. Bitcoin, in the moment, still future-driven, but we see less liquidations. People get more scared about betting to the long and short side. And why is this? Here's the reason. The real deal, 4 days in a row, we see an increase on active wallets, over 46 million. This is the underlying market. This is the real market. And this is really promising for the future, that people go more into the wallet active business. Interesting here, Bitcoin total number of addresses is still going up. Even in the period when we saw the drop in price, people register new wallets. Bitcoin Google Trends, well, it's going sideways. The US is not really in the market. They have so much problems, regulations and all sort of problems, and now the banks as well. So the market is really driven by Europe. Bitcoin on a 1 year's base, and important is the trading volume. Still the volume is very low, and very often I said this is dangerous because little orders to both sides can really move the price. This is what it is. Okay, we come to the trend following indicators, and we are sitting with the Bollinger Bands right in the middle on the blue line. That means there's not much volatility going on. On the MACD here, we see we are not far away from crossing from the downside. That would be a bullish crossover to the upside, but still it didn't happen. As I said, the volume is low, not much is happening. RSI is about 50%, so the relation between buyers and sellers is about 50-50. Quite a healthy situation. Momentum indicator says, well, not much will happen, $29,000. Not really an uptrend and not a downtrend. Interesting is our cycle model. And, well, we are perfectly on track, meaning that the real price and the model price matches very well. It's only a couple of $100 difference, really amazing. And why do we have this model? It's more or less to have an idea what the price could be. With the halving in April 24, this looks like $41,000. Second model says more or less the same. Fibonacci retracements. We are still playing around with this zone between Nova zone and Golden Pocket. And, well, a decision has to come. It would be great in the next couple of days that we move into the Golden Pocket, which is the 61.8, but the decision is still not made. Interesting is the moving average, 50 versus 200 days. We had this golden cross here about 2 months ago, and since then the 50 days moving average, the blue line, is constantly going up. The difference and the distance to the 200 days is getting bigger and bigger. This is a very bullish sign. Finally, we have Bitcoin on a historical base. This is always the 4-year cycle with the tops and the bottoms. And in the actual cycle, 3 years are over, another 11 months we have to go. By the way, you can go on this website here. It's all interactive and you can play around because you also can see in the past how the price went, and in the near future you can play around as well. Okay, finally we come to the miner index, something we established since Monday. A lot of people were asking about this, and basically what it is, We have the red line here is the average of shares from the miners. They made since the halving, which took place in May 11, 20, 763%. And underneath you have a Bitcoin, which made 237. Why is this important? If you don't want to invest in the Bitcoin itself, not playing around with passwords and playing around with exchanges, there is an option that you just buy shares from mines in the United States. They are listed on the stock market and you can buy and sell them every day, and eventually you make even more profit with this. So hopefully you guys, it was valuable information. As I said, last video for the week, and I wish you a great weekend. It would be great to see you again on Monday. Thanks and bye-bye.